Welcome back everyone. Here at Alpha Finance we're all about finding excess returns in the market and growing our wealth, so time is money. Therefore, I'll jump right into it. Today we're looking at Plug Power. This stock has been on an absolute tear in the last few weeks, being up over 70% so far this month. Beyond that, this stock was priced at just $5 a share back in June. So what caused this massive rally, and is there more room for upside? I'll be breaking both of these topics down by first discussing Plug's market, the hydrogen fuel cell industry, and its applications. Then we'll focus in on Plug Power themselves and how they're differentiating themselves as the top stock pick in their industry. This is one of my favorite companies right now, so let's get right into it. Some quick info on the hydrogen fuel cell market, as it is today. Currently it's valued at about $5 billion, however it's expected to reach a value of approximately $40 billion by the end of 2026. This would be a cumulative annual growth rate of 34% over the next 5 years. A combination of increasing government pressure and regulation, as well as a shifting preference of consumers towards low-emission fuels, will boost the outlook for the industry over the next 10 years and beyond. Personally, one of the biggest criteria for when I'm choosing my investments is whether or not the industry that company is situated in is growing or shrinking. For fuel cell technology, it's clear that this industry is going to be growing in the decades to come. Now that we have a bit of information on the industry as a whole, let's dive into the company itself, Plug Power. A bit of background on the company first. Plug Power was founded in 1997 as a joint venture between DTE Energy and Mechanical Technology, later going public in 2002. The company specializes in the development of hydrogen fuel cell systems that replace conventional batteries in an assortment of applications. Until recently, these applications were mostly industrial, in things such as forklifts. However, more recently, Plug's been trying to get into the electric vehicle game. This has been one of the core drivers of Plug's success in the stock markets as of recently. The real change, however, has happened in the last 6 months. Specifically since June, this company has been on a massive tear, going from being worth $5 to being worth over $60, peaking at over $70 just earlier this week. As I'd mentioned earlier, the company was first founded as a joint venture, therefore that lasts in their culture. As we've seen in the last couple months, the company has announced 2 massive joint ventures which have been the core behind the massive drive in the share price. The first joint venture that was announced was with SK Group, a major South Korean conglomerate, where they announced that they would invest $1.5 billion in Plug Power for around 10% of a share in the company. In doing so, they're going to create a joint venture in South Korea to supply hydrogen fuel cell products to the Asian markets. The two companies aim to have this joint venture up and running by 2022. Clearly, ESG and clean energy isn't as important in the Asian markets right now as it is in the West. However, I can see going forward this will increase massively. More importantly, there's no better place to start than South Korea, especially when joined with one of the country's largest companies. Following this announcement, the company's stock rocketed by more than 30%. Less than a week later, a second joint venture was announced with French automobile manufacturer Renault. This second joint venture aims to create a vertically integrated hydrogen fuel cell manufacturing center in France that will also provide hydrogen refueling stations. The company aims to create a pilot fleet of commercial fuel cell vehicles in Europe later this year. Overall, by 2030, the joint venture aims to hold 30% of the fuel cell light vehicle market and be the market leader in the industry. If you're enjoying the video so far, I'd really appreciate it if you would hit the like button and subscribe, as well as turning on notifications. This joint venture with Renault is one example of the big automotive companies trying to take back the market share they lost from Tesla previously. After all, Tesla had first mover advantage, but these companies have long histories of innovation and are bound to bounce back. Using joint ventures with companies like Plug that are innovative in their own way is a way to fight back against Tesla. Whereas Tesla's batteries are electric powered, Renault is clearly going with an alternative route trying to use hydrogen fuel cells as a differentiator. If this method of fueling cars ends up being more popular and perhaps even more efficient than the Teslas, then that could be a massive win for both Renault and Plug. Here's Plug's CEO Andy Marsh giving some info on the joint venture with Renault.
Plug Power. Shares are up, 84% in just 7 trading days. Company making the second big deal in less than a week, announcing a 50-50 joint venture with Renault of France to develop hydrogen-fueled commercial vehicles in Europe. And joining us now is Andy Marsh, President and CEO of Plug Power, in a broadcast exclusive, joining us by phone. Do you have the scale, Andy, the people, the facilities, the capital to scale up to meet that market?
Well, I think when you start thinking about the capital, Brian, uh, we have the strongest balance sheet in this industry with over $3 billion. So we're well positioned. But look, when you're growing like Plug is growing, you're going to need to add people. And I think over the coming months, you'll see additional executives joining the Plug team to really help us grow out this business, both here in North America, Asia, and now Europe.
As noted by Andy Marsh in the interview, Plug Power has the strongest balance sheet in the fuel cell industry. More specifically, Plug currently has $1.4 billion of cash, or better explained, $800 million of net cash, which is cash minus debt, on its balance sheet. This is enough cash to fund more than 4 years of business expansion at the company's current cash burn rate of approximately $180 million a year. And this current cash burn rate is before considering new revenues from the new joint ventures with Renault and SK Group. Before concluding, I want to take a look at some recent price action on the stock. Following the massive bull run the stock had, it's been pulling back in the last few trading days. The reason for this is a combination of an overall market pullback and profit taking, and some new analysis that came out of JP Morgan. Particularly, the stock slipped after JP Morgan analyst Paul Coster gave the stock a price target of 60, saying it was fully valued. Despite this neutral rating, Coster said, quote, "Plug Power is the first and fast mover in the hydrogen fuel cell space with proven technology to pursue a massive market opportunity," saying they could grow sales to more than $1.2 billion by 2024, and quote, that this is ours, JP Morgan's, top pick in the hydrogen space. It seems counterintuitive that the analyst both says the Plug is extremely exciting and the leader in its space, but also that it has a neutral buy rating. And the reason for this is that this analyst uses traditional financial metrics to value these companies. In response to this, Jim Cramer of Mad Money said, quote, "There is an unwillingness of Wall Street to embrace environmental social governance." What Jim is getting at here is that many analysts use old school, basic fundamentals of stock analysis, like ratios and discounted cash flows, but don't take into account changing investor sentiment. Plug is in an industry that young investors are excited about, and that needs to be considered in how demand for the stock and its price plays out, something that Wall Street is not doing. If you take anything from this video, I want it to be the next three things. Firstly, Plug Power is the market leader in a fast-growing industry. Secondly, Plug Power is aggressively pursuing expansive joint ventures. And thirdly, Wall Street may be undervaluing green energy stocks due to their reliance on financial metrics. Based on these factors, Plug Power is a stock that I've invested in and plan to hold going forward. If this has heightened your interest in Plug stock, make sure to do your own due diligence and analyze the stock yourself before investing. Everyone has a unique financial situation, so make sure that investing in this stock is the right thing to do for you. If you enjoyed the video, I would really appreciate it if you would hit the like button, subscribe, and turn notifications on. See you next time.